it's Jack from Jack Gately Real Estate and the Online Real Estate Academy. I'm very excited about this market update. Plus, we're introducing a new metric called pending sales. Let's get into it. And as always, let's start with price. Price has slumped a little bit again. We're now down to $656 for your average single-family home in Massachusetts. It remains in a fairly tight range between, say, like $675 to $650, but it's slumping a little bit. It's way off the high of $792 from last June or July, way off that high. And, you know, at some point, we're either going to regain some momentum or actually drop down to 625 or below potentially 600. We're going to have to keep a real close eye on this, but it's kind of weakening right now. And as price weakens, the time it takes to accept an offer goes up. Look at that trend. Days to offer. So when you put your house on the market, say like on the first of the month, you're not going to accept an offer for, 5 weeks? I think that's like 5 weeks. And whoa, look at that trend line. It is up for sure. It's taking longer to find an offer that you find acceptable. I wanted to stop here real quickly and talk about statistics. And a lot of real estate agents out there and professional associations are always out there saying, oh, the market's great, it's great, it's up this, it's up that. But, you know, the reason why we post these charts so that you can see everything in context is so that you can see everything in context. It's one thing to say that something is up 15% year over year, but where have we been in between? And that's why we post the charts, so that you can see the trend for yourself. Transparency. So you can hear all this hype. We had 250 people at an open house, which is actually something I heard on the radio today. But in the end, what does the data show? I think that's more important, and we can read it together with these charts. Okay, let's take a look at the ratio between original price and sales price. So if you've been watching closely over the last couple months, you know that in December and January, we had some anomalies in the number. That's why I actually added little asterisks on those there. But we knew the trend was overall down. That was clear. And for February, we now have a clean number, and that number is 97%. Which means, again, if you put your house in the market, let's just say for $100,000, you're on average going to sell it for $97,000 on average, right? A lot of variations on individual property. But on average, sellers are taking a little bit of a discount off the actual original list price. And you can see that's a huge trend downwards, so that's more in the buyer's favor. Sorry about that. More in the buyer's favor. Trying to run a business here, you know. Or off the peak, which was like at 107% last summer. Now let's take a look at what's sold. And as you heard me say before, this is a lagging indicator, but wow, it is low. In February, total sold homes, single family homes, 1792 statewide. That's the lowest number in the last 3 years. I know, that's really low. That's very, very low. We usually have it, February is usually the lowest total sold in any given year, but this is actually a little bit lower than the past 2 Februarys. Now check this out. The number sold is the lowest in 3 years, but the amount of property on the market is not the lowest in 3. We have just over 3,000 single-family homes on the market as of the beginning of this month. Now, February, again, is usually the lowest inventory we have in any given year, but that is a little bit higher than what we saw in last year. In fact, it's 1,000 more single-family homes on the market this year than last year. So year over year, the inventory is up. What's the math on that? 50%, right? That is a big, big difference. It's a little bit more like the February 21 market right now in terms of supply. But wow, what a big difference. We had 2,000 homes last February. This February, we have 3,000 homes. But they're still not selling. Or are they? Let's take a look at our new data, pending home sales. Pending home sales are much more of a contemporary data point as compared to sold. Remember, sold data are properties that went under agreement, say like 6 weeks ago. So the sold numbers for February reflect market activity that occurred probably in December. Pending home sales reflect market activity that occurred just last month. So in February, we had pending sales down 13.5%. For a total number of pending sales in February, in other words, properties that went under agreement, to 2,670. Compare that with last year, we had 3,090. So that is a year-over-year decline in pending home sales of 13.5% year-over-year. So what we have to look at for this number is whether or not we kind of come out of the spring. Usually you'd come out of the spring with some type of upswing for March, April, May, June as people put their properties on the market in the spring market, which is the busiest time of the year typically for single family homes. So we're going to have to really watch this. It doesn't look as strong as last year right now. So let's take a bigger look at the economy and where things are going in the housing market. Now, the Federal Reserve basically has two choices here from a policy point of view here. I'll move my picture down here. One, they could kill inflation. In doing that, they'd have to raise rates consistently very high every single month. Or two, they could kind of live with inflation, which means rates go up, but not as dramatically. Each one of these strategies have different impacts for the economy. Let's look at the kill inflation strategy first. With the kill inflation strategy, and of course the mandate of the Fed is to defend against inflation, if you dramatically raise rates, which they've started to kind of ease off on, if you dramatically raise rates, you're going to crash the economy, which would be very, very unpopular, including with the current occupant in the White House and with politicians. Generally, they don't like a bad economy, and a lot of people would lose their jobs. It would be a deep recession, a hard landing if you've heard this. The upside to that strategy, however, is that you can pivot. In other words, you can start cutting rates sooner. So as you crash the economy, you can start turning the economy around sooner. It's like ripping off the Band-Aid, so to speak. The other strategy is to raise rates, but at a little bit more moderate curve. That means the economy is going to kind of slide a little bit, but not as much, and there won't be as much acute job loss right away. And of course, this also reflects the housing market as well. And the upside to this strategy is that it's a softer landing, which is, there'll be some pain, but there won't be massive outrage. Think of like the bad times of the 1970s. On the other hand, the downside of this strategy is that there'll be more and longer inflation. Yeah, so it's kind of like misery for a longer time. I don't want to say misery, but more unpleasantness for a longer time in exchange for not having a hard landing. So these are two trade-offs. My prediction is that the Fed will choose the live with inflation option. I personally would rather the kill inflation option, but I think they'll choose the live with inflation option without actually saying it. I think they're going to abandon their 2% inflation target, not officially, but unofficially, and they're going to live with inflation, which means that mortgage rates are going to stay elevated. They're not going back to 3 or 4% anytime soon, which means all those people that have low mortgage rates, they're probably not going to be enticed to sell anytime soon. Oh, come on, Jack. What does that actually mean? Summarize it for me. It means more weakness in the market. Rates are already back to 7%. I know. I mean, look at this is the headline right now on CNBC this Tuesday morning as I'm making this video. Powell says interest rates are likely to be higher than previously anticipated. So overall, I think that's bad news for buyers and sellers. And even though we might see an uptick in prices this spring market, which would be normal, I think it's long-term more bad news for sellers than it is for buyers. Hey, I'm Jack Gately from Jack Gately Real Estate and the Online Real Estate Academy. Thanks for watching.